Late last week, Fannie Mae and Freddie Mac decided that they were going to lower the requirement for insurance for residential mortgages. Why they do this? Because we have an affordability crisis. You already know people can't afford mortgages. But in addition to the fact that they can't afford mortgages, insurance premiums are skyrocketing. Why is this important to you? Yes, if you're going to go and buy a home, this is important to you because now you don't have to get so much insurance, but also know that if something happens, you're going to be on the hook for it. If you are an investor, this is where I really wanted to get to. If you're a real estate investor or you invest in businesses or stocks that are heavily dependent on real estate, you need to keep in mind that there is a global surge in insurance just overall. It is another crisis that we're having. I don't want to keep labeling crisis, but we got the private credit crisis, we got the home affordability crisis, and we also have an insurance crisis. So I want to share with you why insurance premiums are going up and what you can do about it if you're an investor. Okay, so number one reason, climate risk. I know the climate is changing all over the world and insurance premiums are going up because climate's changing. Number two, building costs are through the roof. They've been through the roof for a nice minute, but basically inflation. Labor's up, materials up. This gets handed out through insurance premium. If labor costs are up, the insurance premium is going to go up and this just gets repriced everywhere. Number three, believe it or not, insurance companies have been losing money. They have been paying more in claims than they've been collecting in premiums. So guess what? Guess who's got to pay for it? You, me, the investors, and the consumers. And the last reason I'm going to share with you right now, there are many more, but the last one is something called reinsurance. So yes, insurers, they insure you, but they have insurance that insure them. That's a whole nother private credit thing. I talked to y'all about that on the podcast, but that's really kind of affected by the private credit and private equity markets. And that essentially is bleeding into insurance premiums. Let's talk about what you can do as an investor. I've mentioned this multiple times before. You need to underwrite more conservatively. Factor in that your premiums can go up 100% year over year. And most importantly, if you're investing in real estate right now, market selection is of utmost importance. Look for markets where the population is growing versus where the population is shrinking. When the population is shrinking, the premiums go up. Where the population is growing, premiums, they're not going to drop them. Let's keep it a bean. They're not going to drop them, but they will be more stable. So market selection is important. So in the past, when you invest in real estate, you could just invest in your backyard and pretty much all the markets were profitable. Right now, it's not that case, and you got to be super diligent about selecting your market. If you want more game like this, y'all know I got a bomb newsletter. I just had an amazing edition yesterday that I got a lot of response from you guys on. Also, we got a podcast where I'm breaking down financial markets in an easy way, but it's still high level. So if you want to step into the room where the players play, comment newsletter down below and I'll put you on our newsletter email list. Also, the podcast episodes will be in there as well. So comment newsletter down below and I'm gonna add you to the list.